Good morning, traders. It is Tuesday, October 21st, 2014, 8:02 a.m. Chicago time. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. The overnight news, the key element pushing us higher here overnight is that there's talk that the ECB is thinking about corporate bond purchases. They're saying prep work is underway, details to be finalized. The decision could be made in December with purchases potentially in Q1 2015. That's led to a nice push in the Euro complex of products, including the DAX, which is up 118 points, 1.38%. Euro stocks up 1.68%. Nice little pop there. China's Q3 GDP had a small beat, 1.9% Q on Q versus 1.8 consensus. That's welcome news by the market. 7.3% GDP growth year on year versus 7.2 consensus. Chinese GDP, although it topped the analyst forecast, shows that the economy is expanding at its lowest pace since Q1 of 2009. Still, the forecast for GDP growth was a lot worse, and it's not as bad as it is. Again, another reason for this pop. China September retail sales, small miss, 11.6% versus 11.7. That's a secondary number. And China Business News says China may set lower growth target for next year. Those of you who were not here, Apple announced its earnings per share beat and revisions beat. Earnings per share came in at $1.42 versus $1.30. Consensus and revenues of $42.12 billion versus $39.89 billion. As far as what's on deck for today, looking ahead, we just had the U.S. Red Book, which is a tertiary number. As far as what's ahead, a half hour after the open at 9 o'clock Central, we have existing home sales. 5.09 million is a consensus, 5.09 million for existing home sales, and percentage-wise, 0.8%. After the close today at 3:45 Central, we have API crude oil inventories. I don't have any estimates or expectations on that. As far as speakers, 11 o'clock, the Swiss National Bank's Zurberg holds a speech in Geneva. At 3 o'clock, RB, the Royal Bank of New Zealand, or the Reserve Bank of New Zealand's Deputy Governor Spencer speaks. Those don't seem to be all that important. And then at 10:30, we have a 1-month T-bill auction. I don't have the volume on that one. That's what's on deck for today. And then now let's go over charts. Overall, this is how things are shaping up. So we've had this pullback. The amount of this pullback is about 9.88% from high to low. We have a what was expected to be a continuation move lower after a pullback is now looking like that's been canceled. The 50% or the midpoint of this entire sell-off is 1913. The overnight high is higher than that. Overnight high came in at 1650. So for now, until we hold this 50%, I'm still holding on to the idea that there may be an additional leg down as a result of this impulsive move down, with a target down here in the 1784, 1785 area below the 1813. That's looking less and less likely. It looks like the market's being supported at the moment. Just for those who don't know, I'm not a bear. I'm not a bull either. I'm just a trader. I'm not smart enough to hold a strong opinion on the condition of our economy. I'm not a fundamental trader. I'm just trading the swings intraday, looking at the swings intraday, and making decisions based on that. To me, it doesn't make a difference if the market's rallying or dropping. I prefer the drop, not because I think the economy's overinflated, that we're all going to hell in a handbasket or anything like that. I prefer the drop because it increases volatility, as you saw here over the last couple weeks. And with volatility comes the opportunity for high returns as well as high risk. This volatility spike here creates an incredible amount of opportunity for traders, especially day traders. It's not something that investors like, because it forces them to shuffle their positions and it forces stops and things like that. So to me, yes, the sell-off is easier to trade, in my opinion. It's better than this grind up that we had here through August. Very tight ranges. Some days we only had 5 or 6 points of range. That doesn't give us much opportunity. We only make money when there's range, when price ticks through up and down. So overall, I'm not really attached to the idea that we're likely to have another leg down. And given the news overnight, it looks like the market's holding on to its gains. So if we look at the overnight session here, you could see what I mean. The market overall goes higher on the open, which was expected. Why? Because yesterday we closed at the high tick, basically. The market pushed away from value for the last couple of days and closed on the high tick, and the expectations for it to continue. The next level up I announced yesterday through the Twitter feed was 1909.25, and so I was expecting it to push through overnight and give us a ride up in that direction. What it did is it fell back towards the point of control from yesterday's session. This is yesterday's day session here. This is the overnight session right here. What you see on the right here is a histogram of all the volume that occurred at every price. That's a volume profile. And what the market has done is pulled back to 1885.75 for the low, and it found buyers right at the European Open. So it was floating down on the Asian session. As soon as Europe opened, you had this explosive move up, worth about 30 points, a little over 30 points. Pretty big for overnight. The volume is not stellar. It's higher than normal, but it's not huge. 465,000 contracts traded so far. Yeah, it looks like 465,000 contracts traded so far. And so from yesterday's 315 close, by the way. But the actual volume for today is around 436,000. So overall, a nice impulsive move up. We have a pullback. We're looking for 1904.50 to hold here, expecting another leg up. I'm expecting this overnight high to be taken. If you zoom into the high, it looks fairly weak. It has a very blunt profile to it. You can see here 23.25, 21.76, then it drops to 386.65. This looks to me more like a pullback and a push. Overnight inventory is long, so there may be a responsive rotation down early on. There may be a retest of 1904 quarter, if not yesterday's high at 1900. Remember yesterday, the high was 1950, the century figure, so that's going to be a bit of a magnet. It's a major strike price. So we'll see how that plays out. But for me today, it looks like a continuation of the bull. Buyers are making a comeback. The chief indication was not yesterday's trading, although yesterday, I'll tell you what, yesterday my primary hypothesis was a retest of 18 82 on a responsive buying, and then the expectation was for sellers to step in and take us out and to cancel out this island day here, take us back into into Thursday's range. The expectation was 1865 or so on the retest, and then I expected buyers to step in around that area, 1865 to 1863. I expected buyers to step in and push us back into Friday's range. Completely wrong. That hypothesis was completely off. What we had was responsive buyers, and once we tested the 1882, the market went and tested the value area, the other side of the value area, and it just continued to hold. It decided to, it continued to push higher. Very strong, a very strong base for this buying. It almost felt like it was sovereign or central bank based. You don't have, if you look at the delta here, nothing huge. We had a bigger delta in this run here and this run back here. Nothing huge, very controlled and very consistent buying all the way through. Okay, so to me, it seems like this is sustainable. So today, again, I expect some responsive selling back lower into yesterday's range. We're trading at 1911. Some a little bit of responsive selling, maybe down to 1905, 1904.50. That area I showed you overnight, and then I expect buyers to take over. We have a weak, what seems like a weakish high, an impulsive move up with which is not complete yet. So I'm expecting it to try to push again. It looks like we're templating the Friday the 10th, where the continuation sell-off happened 2 Fridays ago. So we're looking for this day for clues as to what areas might be tested. Pretty blunt profile, not giving us very much other than this untested point of control at 1475, which I expect us to take out today. So looks like it's free and clear up and into 26 and 27 today if we take out the overnight high. Very hard to predict what's likely to happen given the sell-off. The story is a little bit murky because what we have is a very quick bottom. See this bottom here, somewhat unnatural without some retest. We tried to retest it on last Thursday, but it would have been, I'd feel a lot more secure about the long bias on a swing basis if we had tested this 1813 and looked and saw that there was no continued selling interest, and I would feel a lot more confident. But here, these guys are stepping in earlier. We had a gap that did not fall back into the range. We have a small island here, and then yesterday, strong buyers. It's not auctioning back to give us a better idea of where the interest is. So a little harder to predict here. I'm going to keep my hands off for the first 10-15 minutes to see who's dominant, what the opening type is. Expecting open auction out of range. I expect this to run all over these levels here, the mid of the entire swing, 1813, the point of control of 1475, and the high of 1650 are all vulnerable. So if I see responsive selling down, and I'm aware that 1900's in a way, and I'm looking for a turn, and I'm looking for it to get long into the 1650 and the 1925, 1927 extended target as mentioned. That's the primary hypothesis. If we fall back below 1900, then it gets easier. The next level down is going to be this 1891.50, which was also the high of Friday. And then the extended target becomes 1887 below. That's 20 points below. Okay. So anyway, everything is the same really. We're looking for you're going to be looking for places to get long or short based on the bias and the reaction from the market. I strongly advise against just standing in a way, digging your heels and saying this is where it's going to turn, unless you use very wide stops, which is also not recommended unless you're well funded. And I wait for the market to make its turn before I jump on. In other words, I don't stand in the way just because there's a level there. I don't stand in its way. I'm looking for it to stall. I'm looking for it to see a two-way fight before I step in and risk my funds on any given trade. Watch your risk, people. Good luck.